Nvidia just overtook Microsoft as the most valuable company in the world, if there wasn't the ghost of 2000.
Record highs, record closes for the S&P 500 and the NASDAQ as Nvidia hits a record of its own.
Joins us now. It is Nvidia's world and we're living in it. Like, that's going to be what I say for the next hour and 10 minutes.
During the dot-com boom, Cisco was a leader attracting huge investments based on high future profit expectations. Even after the bubble burst, Cisco actually stayed relevant, though its value settled to more realistic levels. Unfortunately, investors faced significant losses, with Cisco's market cap dropping by about 77% from March 2000 to March 2001. Today, Nvidia mirrors Cisco's past, riding the wave of the AI boom. Nvidia's GPUs are in high demand, boosting its revenues and stock performance. It even executed a 10-for-1 stock split and increased dividends. Now, Nvidia is the largest stock in the S&P 500 and NASDAQ 100 with a market cap of over $3 trillion. However, there are cautionary signs. I personally like Nvidia stock, but I get that a diversification might be a prudent approach here. Consider other companies like ASML, Meta, Microsoft, Amazon, and so on. But for those interested in diversified AI investments, I'm going to give you here 6 of the best AI ETFs to consider, plus a bonus ETF that will surprise you, so watch to the end. I will also tell you which ETF I would pick as a former banker. And if you want to learn how to make some real money, potentially from your existing money, see what we've done over the last few years. 126% gains on capital employed in 2022. We did 105% in 2023. And so far for the year, we are up $14,000 on a $30,000 portfolio. So almost 50% up already on the year. Then come and join my live trading session. The links are down below. We're running one for London time and one for New York time in the coming week. So grab yourself a free seat while they're still available. Now, ETF number 1, Invesco AI, a next-gen software ETF with the ticker IGPT. It comes with a rather significant expense ratio of 0.6%, and I'll say a few more words on that in a moment. IGPT basically offers exposure to large cap tech companies around the world, focusing on those that generate lots of money from AI and software. And those giants are Alphabet or Google, Nvidia, Meta, and it basically tracks the Stocks World Next Gen Software Development Index. It's a fairly long name, isn't it? So it gives us a fairly diversified approach to AI investment across data storage, robotics, autonomous vehicles. It's up 37% in the last year, nothing to be sniffed at. ETF number 2 is the Global X Artificial Intelligence and Technology ETF with ticker AIQ, which also comes with a whopping 0.68 expense ratio. AIQ gives you a broad exposure to the whole AI value chain, resembling something fairly close to the NASDAQ 100, but even more tech-focused. It tracks the Artificial Intelligence and Big Data Index. And the top holdings are things like Nvidia, Qualcomm, Netflix. With over 1.8 billion in assets, it gives us a fairly broad and apparently tax-efficient way to invest in AI technology with a click of one button. It's up 28% over the last year. Global X Robotics and Artificial Intelligence ETF with a rather nice ticker BODS with a Z, and also a fairly hefty expense ratio of 0.68%, targets companies in AI and robotics with a much higher allocation to industrial and healthcare sectors than some of the other ones here. Top holdings are Nvidia, Intuitive Surgical, which is known for its Da Vinci surgical robots. They also have a significant tilt towards Japanese industrial firms that deploy robotics. So it's a bit more of a niche investment into applied automation. This ETF is up only 8% over the last year, possibly showing that the robotics revolution hasn't quite taken off yet. Next, we have Roundhill Generative AI in Technology ETF with the ticker CHAT, C-H-A-T, and an extraordinary expense ratio of 0.75%, marks it as the most expensive ETF you can buy on our list today. CHAT focuses on companies that develop or support generative AI. So sort of ChatGPT type things, image generators like DALL-E, and well, it's an actively managed ETF. So it's more like a mutual fund that decided it now identifies as an ETF, because who wants to buy mutual funds nowadays? The holdings are NVIDIA, surprise, surprise, Microsoft, undoubtedly for its ChatGPT ownership, Alphabet, Meta, and Adobe. So it targets the forefront really of generative AI. It's up 28% over the last year, which it should be given the fees they charge. Next, we have First Trust NASDAQ Artificial Intelligence and Robotics ETF with ticker ROBT, R-O-B-T, which is rather appropriate given the expense ratio of 0.65%. You have indeed been robbed by ROBT. It is, however, a fairly pure play to AI. So they invest in enablers, engagers, enhancers. And it tracks the NASDAQ CTA Artificial Intelligence and Robotics Index and is fairly diversified. So it's got loads of companies in there. The idea that it's balanced. Now, it's the only ETF that is rather brave by not featuring NVIDIA in its top holdings. It's also down 7% over the last year, which could make it a bargain or just a bunch of bad stock picks. Next, we have iShares, Robotics and Artificial Intelligence Multi-Sector ETF with the ticker IRBO, and a somewhat more reasonable expense ratio of 0.47%. IRBO is a more cost-effective alternative with a lower expense ratio. It tracks the New York Stock Exchange FactSet Global Robotics and Artificial Intelligence Index with around 100 global AI and robotics companies. So again, it's a little broader. It includes a lot of small and mid caps. The idea being it reduces concentration risk. This ETF is up 2% over the last year. Now, you might have noticed one thing here. All of the above ETFs are a complete ripoff. Fees matter. And let me show you why. Say you had a portfolio of $30,000 and it was going to do 12% per year, which is somewhat below the history of the S&P for the last 10 years. And you were investing for 20 years. And every single month you added $1,000 because you're a brave little saver. What would that turn into? Well, it would turn into $1.316 million, which is not bad. It's an almost 989% increase on your money, right? Pretty good. You invest $240,000 on top of your $30,000, you walk away with $1.3 million. But that's not the moral of the story. The moral of the story is, what if you paid the fairly extraordinary management fees of Roundhill, which are 0.7%? Well, you would now effectively get an 11.25% return, and the simple math here being 12% minus 0.75%. Give us 11.25%. And you did exactly the same thing, invested for 20 years, deposited $1,000 a month. Then what would be the outcome? Well, the outcome would be that you would walk away with $1.176 million. Not terrible, but you're missing a bit, aren't you? And exactly how much are we missing? Let me ask my little calculator. 1316031 minus 1176470. You're missing a whopping $139,561. So for the privilege of owning that fund, you are giving up $139,000. So yes, fees really, really matter. And therefore, what I would look at be none of the above, but it is something much, much simpler. and it is called the Invesco NASDAQ 100 ETF with the ticker QQM. And yes, that wasn't a QQ, that was a QQM. Now, what the heck does M stand for? The M stands for low expense ratio. The QQQ is the most popular NASDAQ ETF out there, but it has a higher expense ratio. So the QQM is Invesco's way of offering something that the market wants at a lower cost without giving up all the billions in fees they're collecting on QQQ. And it's basically Nvidia, Microsoft, Alphabet, low expense ratio, and a much more affordable option. And guess what? It's gone up by 32% over the last year, coming in just second compared to the 37% number one ETF here. So considering the much lower fees of 0.15% only, for me, the clear winner is QQM. Now, of course, it's not financial advice, just an old banker sharing his thoughts, but be careful with fees. They do really matter. Now, if you want to learn how we make money from our money by being a little bit more active than buying an ETF through trading, a three-step system that beginners can implement. I'm not promising you returns, but I'm promising to show you exactly what I do and how I do it, nothing held back, and it's completely free of charge. Then come and join me either on Saturday, if you're based in the UK or in Europe, or this coming Tuesday, if you're based in the US, because the time zones will work a little bit better for you. The links are down below. Grab yourself a free seat. I love you for watching. If you found the video interesting, share it with a friend. By the end of this video, you and Winston will understand the next investment cycle, replacing the AI rally and how to profit from it. Winston has tremendous insight because he always listens in on our research. But before we dive deeper, I want you to learn how to make money from your money. And it took me years to figure that out.